10-year Treasury yield. All right, guys. I don't want to get into the technical stuff about the 10-year Treasury yield, but I do want to point out why you want to pay attention to it at a high level. First, mortgage rates are correlated with the 10-year yield, so when the 10-year goes up, generally speaking, so do mortgage rates. Therefore, if you're in the market for a mortgage, you will want to understand what the 10-year is forecasted to do. Second, it's also seen as a sign of investor sentiment about the economy, meaning the lower the rate, the more confident investors are about the economy, and vice versa. If the yield is rising, then investors are less confident. This is important for investing in the stock market. And then third, if you're an investor in tech stocks, you want to understand this relationship. Technology stocks have an inverse relationship to the 10-year Treasury yield. When rates rise and are high, then tech stock prices drop. If rates fall or are low, you will notice that technology stock prices will be high. Brian Colelio, the technology sector director for Morningstar, notes that in theory, there should be a solid inverse relationship between interest rates and technology stocks that relates to the way investors assess the value of a stock. It starts with the fact that the bulk of fast-growing technology companies' earnings will occur in the future. In order to peg what the value of a stock is today, based on those future earnings, an investor needs to discount the values of those future earnings. Higher interest rates translate into higher discount rates, which reduce the value of future cash flows and thus reduce the value of the stock price today. All else equal, tech stocks with more earnings in the future will face a greater hit with higher interest rates than mature companies where more of their earnings are in the present or near term. And lastly, if the 2-year Treasury yield, which is supposed to be lower, is higher than the 10-year Treasury yield, it is generally a reliable sign that a recession is on the horizon, so take note if this happens and get ready to buckle down.